Hi you guys, welcome back to the channel. My name is Brad. This is the Firefighter's Financial Toolbox. Today we're going to talk about two popular Vanguard ETFs and the similarities and differences and which one would do better for you. Now, as you guys know, everybody's investing journey is different and everybody's needs can be a little bit different. So we're going to talk about two separate ETFs, what I like about them, what I don't like about them, and the differences between them. Now you guys know I'm a big Vanguard fan. The two we're going to talk about today are VTI, which is the Vanguard Total Stock Market ETF, and VOO, which is the Vanguard S&P 500 ETF. Now both of them have an extremely low expense ratio of 0.03%, you guys, 3 basis points. So you're paying $3 on 10,000. Both very, very inexpensive. Both have about the same risk potential. On their little scale, you'll see they give it a 4 out of 5. So can be volatile, but not as volatile as, say, an international stock. The biggest difference between the two is the VOO, being an S&P 500 index ETF, has 508 holdings. Obviously, the 500 in the S&P 500, which is of course the 500 biggest companies by market capitalization in the United States. VTI is the total stock market index, and it has a total of 3,535 individual holdings. So you're getting a lot more diversity because you have a lot more holdings. You have all the big companies, you have some medium companies, and you have some small cap companies. Obviously, the smaller the company, the more volatile it becomes. With the broader diversification, you do have a little bit more volatility in that. If we look at the medium market capitalizations, so what the medium market cap is, it means half are smaller, half are bigger. The median for the S&P 500 is about almost $119 billion per company. Now, on the other hand, because you have smaller companies in VTI as well, the median market cap on that is about 84 billion. So you have some more companies that are smaller, you have some more companies that are obviously bigger. Both have fairly similar price to earnings ratio. With the S&P 500, you're about 17.4, and with VTI, they're about 16.9. If we take a look at how they perform over the long term, we can see that in the last 10 years, if you had the S&P 500 ETF, you actually came out a little bit ahead. As we know, S&P 500 companies have done very well, where small cap stocks in the last 5 to 10 years have not performed as well. So obviously you can see there's a little bit of a lag there on VTI over VOO. Now, does that mean it's going to happen going forward? Of course not. But here's a simple thing to remember. Remember Warren Buffett, the Oracle of Omaha, the best investor on planet Earth, says, if you don't know what to do, buy the S&P 500. So VOO is going to get you the S&P 500. Now, if you want broader diversification in your portfolio, which is easily accomplished by one ETF, VTI is your answer, because if you choose that you do want to have some small cap or medium cap, middle cap stocks, those are already included in that fund, where if you bought VOO and you wanted to add them, you would have to add either an extended market fund to get the rest or some kind of small cap ETF, which would add to your costs. Which is right. Depends on individuals. A lot of companies in their 401k plans have low cost S&P 500 of some kind. So if you have that in your plan, maybe you don't need to add that to a Roth IRA, let's say. Individual needs are different. If you're just starting out, and let's say, for example, you don't have a workplace plan. Let's say you work for a company that doesn't offer a 401k, and you're just starting out, you're 25. You want to get started. Either one of these ETFs is a great way to start. And the good thing about the ETF is they're available for the price of one share. So if we look at our chart again, we see that right now this is the middle of April 2020, so obviously when you check it, it could be different. But right now you could buy one share of the Vanguard S&P 500 ETF for about $256, where VTI right now is going for about $139. Now those prices do change throughout the day, so when you buy it, you would be buying it whatever that price currently was. But it gives you an idea, whereas if you were to take the equivalent in an index fund and you were just starting out, remember you would have that $3,000 entry fee when you first bought the fund, at least through Vanguard. Now, are these the only ETFs out there that work? Of course not, you guys. I'm going to be doing a little series here comparing some of the different ones. You know, my three favorites are Vanguard, Fidelity, and Schwab. I think of the three, all three make good low-cost options for investors who are just starting out. And I think as a beginning investor, it's really important that you save all that you can and keep your fees low. Now, especially with a long term, if you're in your 20s, you've probably got 40 years of investing ahead of you. 40 years of fees can add up to hundreds of thousands of dollars over your investing career. So keeping those fees as low as possible is really important. These are two ETFs to get your coverage of the United States stock market. All right, you guys, I hope you got something out of this. If you did, give me the thumbs up. Like always, if you're new to the channel and you still haven't subscribed, you guys, hit that subscribe button, ring the bell. You'll get notified. Try to make 2 videos a week, but lately it's been down to about 1. So I appreciate you guys hanging out. I appreciate your interest in this stuff, and I hope that you got something out of this. We'll see you again. Thanks.